Thank you, guys. Welcome to the Daily Wrap for Tuesday, the 30th of June. Overnight, once again, as seems to be the case most times we talk, the US and Iran have had more, call it, peace talks, I guess, over the weekend, and again, oil prices moving around on the back of that. Like I said, it's becoming quite a trend, and moving forward, we'll look to just sort of briefly highlight some of these points and start looking at a few other sectors as well, just to change things up a little bit. So, Jack, anything out of the ordinary with oil on the back of those announcements, or?
Not really. It's just there was some sort of tit-for-tat conflict on the weekend, but it seems like markets are sort of regarding oil remaining cautiously optimistic, so it went up slightly, but there was no big spikes in the price, so I think people are still hopeful of a long-term resolution moving forward.
Yeah. And so Alphabet, the owner of Google, has debuted for the first time in the Dow Jones index, resulting in a 5% increase in their share price. Can you just give a bit of context about what this means for Alphabet and what the process is for a stock to get into that index?
Yeah. So unlike the Nasdaq, which we talked about with SpaceX, how there's sort of a rigid criteria companies need to meet based on their financial numbers and outputs to be able to be included on the index, the Dow Jones is a bit different, where it's entirely subjective. So they've got a panel of committee members who sort of meet on a needs basis and assess different companies. They're trying to get a broad overview of the US economy, diversified companies that are sort of reflective of the modern US economy. Traditionally, it's been the 30 big blue chip companies, which is where it's got its name from. So Alphabet's now been included, so that brings the Magnificent Seven companies. 5 of them are now in that index. It replaced Verizon, which is one of the big telecommunication companies in America. Basically, Verizon's gone up 2% in share price the last 12 months, whereas Alphabet's gone up 98%. So they're always going to lean towards companies with a lot of financial growth. And Alphabet then got another 5% boost on the inclusion, and that's because now traders investing in ETFs that have the US 30 exposure are now going to be buying up those Alphabet shares, so they just naturally get that price increase just by from their inclusion.
Okay, thank you. So over to Japan. So the yen's dropped to its lowest level against the US dollar in over 40 years. So Bank of Japan have tried to implement monetary policy and to little effect.
Yep.
Is there anything else on the horizon for the economy over there, and what do we see kind of happening with the yen over the next few months to years?
Yeah, so we spoke how Bank of Japan did raise the rates from 0.75% to 1% the other week. Had little effect on the price of the yen, and that's because the Fed is so hawkish and likely to raise their own rates. So that means the carry trade is still in effect. The carry trade is investors borrowing money at the lower yield, so they'll buy the yen to then invest in high yielding currencies like the US dollar. And the difference in the interest rates is how they get their yields. So that carry trade, despite the interest rate rise, is still very much there and will only strengthen with the US dollar, probably getting an interest rate boost as well from the Fed. What that means is the Bank of Japan have tried to verbally sort of intervene and strengthen and support the yen. That hasn't been successful. So the monetary policy hasn't been successful. The verbal confirmation hasn't been successful. And what that's starting to point to is manual intervention, where they'll actually have to physically invest in the yen and buy the yen to support the currency and try and bring that price down. So that's what we're likely to see over the next couple of weeks if it doesn't sort of start correcting.
Okay. And back home today, so RBA will publish their meeting minutes from the recent rate decision, discussing of the board members and the economic conditions that influence their their decision making. Off the back of that, are we expecting to see movements in the Aussie dollar?
There won't be a lot of movements in the Aussie dollar. Obviously, they've already delivered their statement when they announced the decision, which sort of gives the context for the decision. The meeting minutes just sort of go into a bit more in depth about that. It'll show the individual committee members and what direction they voted in. So it more just gives added colour to the situation, but unlikely to have any tangible effect on the Aussie dollar today, unless there's some incredible surprise in the voting process.
And Chinese manufacturing data coming out today. What are we expecting here?
Yeah, we're only seeing small changes in that. The manufacturing PMI looks set to increase slightly to just above the 50 level, which is the baseline. Non-manufacturing, so the services PMI, looking to just drop below that 50 baseline. Again, they're pretty small moves. We're only likely to see currency reaction if there's a surprise in the actual results that differs from the forecast.
And UK GDP, tell us about this one.
Yeah, this one's sort of slated to remain flat at 1.1%. And I think obviously the big story in the UK at the moment is their next Prime Minister and how that shakes out. So traders probably more focused on that than the economic data, which is pretty stable at the moment.
Okay. And German CPI slated to fall 10 basis points down to 2.6%. In the scheme of things, is that a large change?
Probably more in the context of just the global inflationary environment at the moment. With the oil supply shocks, inflation sort of really taking off. We've seen that in Australia and the US and broader globally. So it is a little bit surprising to see that they're expecting CPI to fall a bit. And Germany is one of the largest Eurozone economies. So that's obviously going to have an effect on ECB monetary policy moving forward. So it is interesting to see that drop down a little bit.
And some big moves since yesterday. So gold dropping almost 2% overnight.
Yeah, not a big move given gold what it's done the last eight months or so. That's mainly on, again, just US dollar strength. Okay.
And the pound yen? Not
yeah,
pound
sorry,
yen.
no, it's pound yen. I didn't change the USD part.
Okay, so it is the pound yen.
Pound yen, definitely.
Yeah.
Again, that's just showing the weakness in the yen. The pound sort of was solid yesterday. But yeah, the yen's going to be weak against most of its crosses, with investors sort of anticipating probable intervention from the BOJ.
And the Nasdaq, so 2.5% increase.
Yeah, that was a lot of the Mag 7 stocks yesterday had a positive day, which obviously they're large companies. That's going to boost up the index. So that was basically investors looking to buy the dip after the recent tech sell-off a little bit. So just there's always going to be to and fro with those big companies.
Yeah, I do always find it interesting, just obviously how much value is in something like the Nasdaq. Yet, we can still get these moves of 2.5%, 3.5% in an instant. It just kind of shows you just how powerful the markets can be when announcements and things go out and people's perceptions change very quickly. A lot of people are very short-term thinking, and that's why we can see some of these really, really large swings that happen all the time. And a bit of volatility creeping back into Ethereum. Any thoughts on what's caused this one?
Yeah, we saw a spike in Ethereum yesterday, obviously one of the larger cryptocurrencies currently. And this was, again, like we talked about Bitcoin, sort of change in ETF portfolios. A few of the big crypto investors did invest in Ethereum yesterday. And then BlackRock also announced that it was incorporating USDE into one of their sort of fund platforms. The USDE sort of backed in value by Ethereum. So obviously they're going to need more Ethereum to support that. So that gave a big boost. BlackRock's the biggest asset manager in the world.
Okay. And are they looking to phase Bitcoin out at all, or is this more of an addition to their portfolios?
I think it's more of an addition rather than a replacement.
And the chart of the day, the Dow Jones, which we talked about earlier, you can see obviously, going back 3 or 4 years, the fairly consistent increases here, but a few spikes along the way. Tell us about this one. What are the trends looking like here?
This is more just pointing out when we talk about all-time highs, what it actually looks like, and you can see the growth the last few years. This is since 2022, and you can see the first half of, basically the entire 2022, it was relatively flat, sort of oscillating at that base level, and then since then it's sort of been very positive. You can see the moving averages all increasing over time. And then this year, you can see the huge dip that the Iran conflict caused. It's since bounced back and then pushed past that thanks to the latest AI sort of boom and optimism around that. So all the indicators are looking like that positive momentum is going to continue. RSI is at 68, over 68. So again, that's really high, indicating a lot of positive momentum.
And just remind us again what the moving averages are and why do so many people use them as an indicator of the charts as a whole.
Yep. So those moving averages, the yellow's the 50-day, orange 100-day, pink 200-day, and that's just looking at the price average over those time periods. What they'll act as, if we can see the price is currently sitting above those levels, they'll act as support levels. So if the price does start dropping down, those moving averages will sort of tend to act as a bit of a floor and sort of help boost it. When you see the big price corrections and change in trends is when they'll break below those moving averages and start moving in the other direction. So they are an important tool that traders use when they're analysing charts.
And the article of the day regarding Alphabet, which we've talked about, I think it's a good read and worth having a look over if you get some time today.